Guys, everything known is on here. I know I said I was only going to do one video yesterday. I keep changing my mind. Look, I'm going to do, I think what I think is, well, I'm going to do what I enjoy. First of all, I don't want YouTube running my life in terms of the videos that I make, and it was getting to that point. So I'm going to do videos that I enjoy so that I can keep enjoying sharing the information and keeping it a hobby. So anyways, along with that, this is an article from Business Insider, so you know, a significant source, and it's about the Comex. The Comex is running out of precious metals. Apparently, there's a dangerous situation taking place in the Comex Gold Vault. Something big is happening with gold. Over the past few years, if you bought and owned gold and mining shares, it's been frustrating with gold prices in the doldrums, 2015 to 2012. That's 4 years of downside correction, but that was then and this is now. Let's discuss what's happening now and nail down some serious opportunity. Follow the money, and right now money is moving into gold and select miners. In fact, there's so much interest in paper gold that physical supply has utterly broken down, as in crashed and about to burn in a roaring fireball. So what we see here is confidence in the fiat currency degrading. People are recognizing that the economy is not so good as they say it is, and people are moving to gold, and that's why you see a move in gold prices higher, even though the central banks don't want that to happen, because if people see gold and silver going up in price, that means everybody's losing confidence, and that's going to really speed up the downfall of the economy. This is critical, it goes on. The amount of physical gold in storage in Comex versus the number of registered owners against each ounce is nuts, the article says. From a few owners per ounce, it jumped to 542 by this March. So for every ounce of gold that they physically have in the vault, there's 542 people who own a piece of paper that says, I own that ounce of gold. So it's over leveraged and then some. Look at what's happening from the early 2000s to not long ago. The number of owners per ounce, people who bought paper contracts supposedly backed by real metal at the Comex, was basically flat. Just a handful of claimants per ounce. Plus, there were literally millions of ounces of gold in the deposit in Comex. There was gold in that vault, in other words. If you showed up with a contract, you could walk away with gold. That's how the markets ought to work. Then starting in 2014 and trending to mid-2015, the number of registered owners moved strongly up to about 100 per ounce and then 300 per ounce. So the ratio is increasing, and eventually someone's going to say, look, I want my gold, and there's going to be literally over 500 other claimants on that gold, and if they all say, look, I want my gold, they're gonna have to pay that out in cash, and that's what the contract says. Apparently it says, look, if we can't give you gold, we'll pay you out in cash. And so the paper markets is completely bogus here. By late 2015, registered owners against the Comex Gold spiked to a nosebleed level of 542 contracts to every 1 ounce of actual gold in the vault. Thus, if even one claimant shows up for an ounce of yellow metal, the cupboard will be bare, and there are 541 other claimants as well. Uncovered speculation has gone exponential. There's lots of paper gold and almost no real gold, which makes for a high-risk scenario. This is why gold should really be much more expensive per ounce, and this is why there's a massive upside, an investment upside possibly, but more significantly, wealth preservation upside to it. As the dollar is going to inflate infinitely and be completely wrecked, and we'll move to a new fiat currency, whatever that is, or maybe we'll just move to a mark of the beast system, then gold and silver is going to skyrocket in price. In essence, all hell has broken loose in the gold trading pits. Naturally, the mainstream media has not discussed it. They don't want to discuss that people are getting excited about gold and silver, because that must mean that the economy is shaky and volatile and people are getting scared. So the mainstream media doesn't want to discuss gold and how inflation and unemployment are super duper under control. Economy is growing nicely, thank you. That's what the mainstream media is saying. Relax, go shopping, the mainstream media says. take a cruise, buy something else you don't need with money you don't have. Mainstream media would never bother you with the fact that there's almost no gold in trading vaults. So when someone calls in their paper gold and they show that Comex doesn't have enough gold to pay it out, that's going to hit the mainstream media pretty quick. They have to cover that when the Comex defaults and runs out of gold, because that's their whole purpose. That's going to be massive. That's going to be massive news. The cupboard is so bare for gold that the Comex could collapse in the equivalent of a run on vaults, into the equivalent of a run on vaults. If that happens, when that happens, watch gold prices spike, and that's what many investors in gold are basically saying. It has to go up, probably into the thousands of dollars per ounce, maybe even higher than that. And silver is probably going to be in the hundreds of dollars per ounce, where it's about $17 an ounce right now. On that golden day of reckoning, you'll see more money than a buying frenzy or even panic. It's utter pandemonium. When this bomb explodes, gold prices will melt upwards in ways we can scarcely imagine. And this is going to strike fear in the hearts of everybody who's watching this, because they recognize if gold and silver are increasing in value, then the economy is not doing good. The end of the article basically says, own physical gold. If you don't have some, get some. Buy coins, whatever. You know, it's up to you what you do with your money. And the first thing to do is, the first store of wealth would be to pay off your house and your property. If an economic collapse comes and the end time, the 7-year tribulation, doesn't come immediately, then you're going to be much better off having no debt, and having maybe some property paid for, and maybe some chickens in a shed, than you will having gold or silver. Having said that, if you have any extra money, it's smart to have it there, and it's also a great way to save for retirement as well. Precious metals, they don't increase necessarily with the interest rate that maybe stock markets or other things do that you might have your money in, but they also have much less chance of dropping significantly. They're always worth money, and that's why over time, over 50, 20, 30, 40, 50 years, gold and silver makes an excellent store of value if you want to be real safe about your money and not get out there in such volatile markets where you could lose everything. I mean, the potential is there to lose everything. So there you go. Business Insider, a gold update. There's lots of gold news because gold is increasing in value recently, and it's just an indicator that the economy is getting weaker by the day, and it will eventually collapse. And basically, that's what we're waiting for to happen, because the fundamentals suggest that it can't go much further here. Pay attention, guys. Thanks for watching. Please subscribe, and we will see you guys in the next video.